With China, we're very happy with it. We have everything we need, and we're going to do very well with it. We're rocking in terms of deals. Now, at a certain point, we're just going to send letters out, and I think you understand that, saying this is the deal. You can take it or you can leave it. But we're dealing with Japan, we're dealing with South Korea, we're dealing with a lot of them. We're dealing with about 15 countries.
You know, Brian.
Yeah, this is a big problem. And I think it's worth remembering what the PPI data actually told us this morning. Because Trump, just to put this together in a simple way for those of you who didn't watch me explain it this morning live, the PPI data had underlying problems in it, and everybody's only talking about how great the headline is. So as usual, the Qs are in their typical 90% of the time were up over the last 60 days. So it's the easiest play. Just buy the dip on the Qs, it keeps going up. But what's actually happening underneath the surface, and how does that compare to what Donald Trump just said? Well, I wrote that out, and you could see this kind of piece on the Meet Kevin app. If you download that, not only can you customize notifications for my videos, but you could also see sort of some of my notes and thoughts on what's going on in the economy. But PPI and tariffs. This chart right here is very important because this chart shows you core goods pricing in the PPI report. The producer price inflation report tells us not only about goods pricing, but it also tells us about things like trade services, food, warehousing, brokering for trade, and of course, actual goods. And what we found was a note from the PPI report that said that over 80% of the May advance can be traced to an index for the final demand goods less food and energy. So basically, not brokering, warehousing, energy, food, trade services. No, not services inflation. Instead, goods inflation. Now, why is that a problem? Well, it's a problem because goods inflation showing up over here at the highest rate that we've seen since 2023 is an under the hood because it pressures margins. And remember that this is the first month we're seeing margins just now starting to be pressured, while we have actually probably stocked up on average, I would argue, about 3 months of inventory. If we've stocked up about 3 months of inventory, we've got inventory for April, May, June, which means technically this early surge in consumer good or producer price goods pricing for May is really just a sample of where this bar chart could go. Once we get to July and that inventory really needs to be fully rebought, we could see this go off of this chart. The danger about this going off of this chart is that at the same time as producer price costs go up and consumer prices, like we saw in CPI yesterday, stay low, companies take it in the margin. And when companies take it in the margin, they lay off. That's generally what happens every single recession. And so, when do we get that? Well, we potentially get those higher prices that fully hit in July. You see layoffs in August and September. By September, we'll have June, July, and August data not only on inflation, but on jobs. But any increase in layoffs, as we've previously talked about with the Beveridge curve, any increase in layoffs is likely to normalize the Beveridge curve. This is the Beveridge curve, which shows you that when job openings are very, very low, we sit right here where my mouse is right now, okay? Job openings very, very low, unemployment very, very low. Very odd. Usually when job openings go down, the unemployment rate goes up. That's why we have this downward slope right here, right? This is a normal Beveridge curve. And you can see kind of like these were the dot-com bubble era years, and these were the years of the post-Great Recession recovery. The Great Recession was, over here towards this bottom side. And then you had the 2018 era over here. Lots of job openings, very low unemployment rate. So you can see all of these various different times. Dot-com bubble, boom. Great Recession, boom. Very, very normal distribution on the curve. This is what the situation looks like now, which is a complete disaster. We're over here. So in other words, any slight increase in layoffs skyrockets the unemployment rate because job openings are so low. So once that Beveridge curve normalizes, which we expect would happen sometime between now and probably September, bearing in mind that we might not actually see the 75,000 workers from the federal government who took offers to resign with benefits until September. Those job losses might not show up until October or November or December because of lags in filing for unemployment. It's important to remember that those are just going to add insult to injury to any layoffs that we potentially get. And this PPI report actually starts signaling under the hood cracks. And nobody's talking about it right now. But when we have the highest increase in producer price goods pricing, sounds a little redundant, since January of 2023, it's just a matter of time for these PPI numbers to continue to spike, especially as we rebuild inventory at higher prices. And then poopy hits the fan with layoffs. Think about a company like Restoration Hardware for a moment. We're going to go ahead and pull it up. I want to show you this. Investor Relations, go to Restoration Hardware. You could even look at a company like Ubiquiti. Ubiquiti manufactures most of their goods in China and Vietnam. This news that we got on this Chinese trade deal from Donald Trump is fugazi. This is a joke of a deal. It's a very limited deal that basically says, yeah, we'll take your Chinese students, we'll change nothing on the 55 and 10% tariffs, and we'll take some critical minerals, and we'll give you ethane and jet parts. Very, very, very nominal in the way of actually providing us a full-on trade deal. So the idea that this Chinese trade deal is going great, in my opinion, is fugazi. Then you've got the Trump threat that we're about to assign tariffs, within the next few weeks, coming up on July 9th's 90-day window. This is Donald Trump's method of trying to say, hey, we're going to limit, or we're trying to pressure our negotiations. We're trying to get other countries to realize, like, hey, we're about to assign you tariffs, so you may as well negotiate with us because we're about to assign tariffs to you. All of that hurts. A company like Ubiquiti manufactures most of its goods in Vietnam and China. A company like Restoration Hardware manufactures a lot of its furniture in countries like Taiwan, as well as a lot of other Asian countries. And when we look at inventories for them, we could look at their balance sheet right here. You hear that screaming out there? If you could hear that screaming, it's because they're screaming about tariffs. They're pissed. They're tired of this crap. But I want you to look at Restoration's Hardware's cash position. Look at this. $30 million of cash. That's all they have. Why? Because they plowed money into merchandise inventories leading into the tariff drama. Fine. So you'll be able to continue to sell this product for quite a while. You've got $1 billion of inventory to go through. How long does $1 billion of inventory last you? Well, you have net revenues of about $3 billion a year. So we have $1 billion of inventory. It lasts us 1/3 of a year. Restoration Hardware, assuming revenues stay stable, has about 4 months of inventory as of February 1st. Now, assuming they're out of cash and they basically, probably didn't build up much more inventory, we'll give them the benefit of the doubt and we'll say they have inventory for April, May, June, and July. That means Restoration Hardware, starting probably in July, needs to start stocking up again at higher prices to have inventory for August. Otherwise, you're going to have empty shelves at Restoration Hardware in August. Restoration Hardware has way too many locations to have empty shelves, so they are going to get hit by tariffs in July. In July, they honestly, they probably need to start putting the orders in now because it's going to take 45 to 60 days for you to get your shipments from Taiwan or China or whatever. So you're going to start paying those higher producer prices, and those are going to show up in this chart. This is an early warning sign right here for May. Mind you, also, it's not me, who's bitching about the Trump tariffs. I mean, this is old news, okay? Wow, Kevin says tariffs are bad. Okay, old news. Look at the Wall Street Journal editorial board. Trump has no China trade strategy. I understand this says opinion. I want you to know this is the editorial board. So it's not just some schmuck. It's the editorial board. So instead of being one schmuck, it's a group of schmucks. All right? So it's a little different. It's a group of schmucks from the legacy media. All right. President Trump on Wednesday hailed the result of the latest trade talks with China as a great victory. But the best we can say is that it's a truce that tilts in China's direction. Details are few, but the countries appear to be resetting their trade relationship to where it was a few months ago before the tit-for-tat escalation. Trump has agreed to reduce tariffs to 30%, including those from the first term, so we're basically at 55%, and China dropped its tariffs to 10%, which obviously Donald Trump brands as a win because it's 55 to 10, but, it misstates how much we import from China relative to China imports from us, as well as, of course, the individual categories that are being affected by this. But anyway, But Beijing continues to leverage its stranglehold on rare earths. Right, they're only providing a 6-month reprieve on rare earth exports to the United States. So they still hold this hammer over our head. Donald Trump didn't mention that we're only going to get exports for 6 months on rare earths because that's kind of an L. All right, which are used in medical lasers, drones, electric vehicles, blah, 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 motors, you name it. China's export controls force some automakers into idle plants, this is true, slow production for drones needed in Ukraine, and threatened U.S. manufacturing. Beijing will ease its restrictions on rare earth minerals and magnets for 6 months, while the U.S. will relax its restrictions on the sale of jet engines and ethane to China. Okay, we already covered that. The U.S. will keep its export controls on advanced chips, which have been a hindrance to Xi Jinping's ambitions. Of course, we expect that they're just going to import them through Singapore or, some other BS way. The administration also rescinded restrictions on Chinese student visas. Fine, we already heard this. Trade wars are mutually destructive. And mind you that the Foreign Affairs has a really good piece where they talk about trade wars usually lead to actual military warfare. Not always, but they can. And this is where people were worried about Taiwan and China. Maybe that's a little overblown at the moment, but Jamie Dimon's also been complaining about that. But then again, Jamie Dimon and complaining kind of goes hand in hand. I think it's because the fintechs have been reaming him up the butt, and there are way better options. Like, House Hack is really excited because we're looking, like, we just opened a QuickBooks bank account because we think it's going to plummet our accounting and auditing costs, because you immediately have this sort of sync between QuickBooks and your accounting software. So like the bank and the accounting software, it's one and the same, which is crazy. Hashtag not sponsored by QuickBooks. I'm just saying, like, the big banks don't innovate. There's so many other innovative products that you could win from and save massively if you're a business. It's something to consider if you're a business owner. Trade wars are mutually destructive. Where Trump's export controls... Oh, by the way, did you know that we have an offering going for HouseHack? If you're a non-accredited investor, you can now invest in HouseHack. Earn 5% through conversion. You get all the upside in the stock after that. Downside protection. Well, you've got a bond, so obviously you've got preference in liquidation, although, knock on wood, I don't think that's an issue at all. Very optimistic on it. Of course, I'm biased. I'm the CEO, but if you want to be part of my real estate startup, we've got over $70 million in assets, over 13 in cash, sitting ready to buy the dip this winter, or continue building our ADUs. It depends on the market. And would love for you to be part of the ride. No bank debt, which is kind of incredible because when we go to refinance, we can skyrocket the size of this portfolio, which is really exciting. But anyway, trade wars are mutually destructive, though Trump's export controls harmed American businesses as well as Chinese. China relies on U.S. ethane, a byproduct of oil and natural gas production, for its petrochemical manufacturing. Because the U.S. has few other export markets, Trump's embargo could have throttled domestic oil and gas production, so it hurts us also. U.S. manufacturers will no doubt welcome the rare earth reprieve, but China is keeping the gun on the table. Fine. China is weaponizing its dominance in rare earths in a conflict with Japan. Fine. Developing alternate supplies will take years. We already know that. A smarter trade strategy would be to work with allies as a united front to counter Chinese predatory practices. I totally agree with this, by the way. Like, I'm not saying that we shouldn't do something against, IP theft or China or whatever, but using tariffs sucks. Like, a united trade front between our allies, Japan, Taiwan, Vietnam, the European Union would be great. Instead, what's happening is China is teaming up with the European Union, bringing and lowering tariffs on BYD electric vehicles into the European Union, lowering trade barriers with China, increasing trade with China. These are all things that hurt us. Instead, Mr. Trump has used tariffs as an economic scattergun against friends and foes. I agree with that. It's like scattershot in World of Warcraft, the hunter. Wrong game. This increases China's leverage, and like this week's trade truce, there's nothing to cheer about. I agree. I think China actually wins in this trade deal. That's all they say. Yeah, I'm curious what some of the comments here on this. Can I sort by top? Most liked. Let's see. Finally, the editorial board has the editorial board has been itching to write, and no deflection to Biden or Harris or the laptop. Kudos. Interesting. Okay. The fact that there wasn't a single pot shop at Biden is actually jaw-dropping. Oh my gosh, a Wall Street Journal editorial that finally tells the truth? You all just realized this? Taco is a moron and got into fight not understanding all the mechanisms of trade. His 2 a.m. tweets and rants don't show a level-headed, deep understanding. Well, people would come back and say it's his version of the art of the deal. Strategy, because of him, produce is going to go unprocessed and food prices are going through the roof. There is a Black Hawk flying over the fields in Ventura County. Hey, that's where I live. I think I actually saw that yesterday. That's crazy. I was like, man, that's a loud puppy. That's because I was working in my garden with the boys. Liberation Day, permanent car import tariffs, moving goalposts. The president is brilliant. He doesn't really mean what he says. It's a clever negotiating tactic. No, he's a pathological... It's actually interesting to see the hate for Trump here in the comments section of the Wall Street Journal. Surprised. Because if you go on X, everybody's shilling for Trump. And remember, my POV is to be hated by both sides. So that's how I know I'm in the middle, when both sides hate me. So, I mean, look, to me... Oh, I'd love to bring special situation. I love Jay. He's great. But to me, this PPI is a little bit of an early warning. I'm not saying it's panic today. You know, this is not like panic sell today, you know, whatever. I'm still a fan of the trailing stop strategy. And frankly, the trailing stop strategy has been fantastic because you shouldn't have gotten stopped out at all between like mid-April when I first announced it and now. In fact, there were people watching my videos that are like, Kevin, why are you saying set trailing stops? And my answer is because I believe it. We could V-shape recovery from here. And people are like, but you're so bearish on tariffs. I go, yes, but that's for the second half of the year. So, you know, to me, it's remarkably transparent, and I try to convey that on a daily basis. Of course, you know, people like to say that, oh, well, you're just saying that, you know, to cover both sides. It's like, if you go through what I say, it's pretty damn consistent every single day. And if the facts change, obviously, you know, we will change directions. Like, I was really hopeful that tariffs would have died when the courts said that the reciprocal tariffs were illegal. I was hoping that we would have had an injunction that would have kept them illegal for 6 months or whatever while the negotiation goes on in courts or the trial goes on in courts. And then Trump would have just walked back and blamed the liberal judges or whatever, even though, you know, some of them are Republican-appointed judges. And he would have just backed off of tariffs. That would have been the most bullish thing ever for this economy. But unfortunately, the tariffs were allowed to remain in place during a now extended stay through July 31st, where the court will first hear oral arguments, which is so dumb that for 6 weeks they're going to keep this going. Now, I understand the courts would have rug pulled Donald Trump's ability to negotiate, but I was shipping that. Trade pun? Anyway, go check out househack.com. Read the paperwork and offering circular and disclosures and risk factors, because there's risk with every investment. All right, that's my take on trade and PPI.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.